think angel investors, former, still, part-time employees of OpenAI, they're pretty cool, but they went on vacation, so I'm gonna make sure the audio is working, make sure you can see me, make sure I'm making eye contact with you, so you actually think I am talking to you. We got work to do, but we should be live on X. We're gonna check for sure. Should be live on YouTube. And we should have audio that's not so bad that the trolls are gonna come out in the YouTube comments. And by trolls, I mean people like me. So let's get started. And if you haven't seen the market, well, if you're a TBPN person, OpenRouter is the market for you. It's what they call the private equity, I guess. $8 billion. Don't quote me on that. I guess that's why Jordy and John go to the gym and have their interns print out numbers and pieces of paper and stuff. Who really cares? It's 6 billion, it's 7 billion, it's 8 billion. It doesn't really matter for all intensive purposes for people who are trying to invest who don't live in San Francisco proper or Palo Alto, Menlo Park, whatever the towns are called, LA, if you're like TBPN. But that's the docket so far. And welcome to Self-Advisors, where we talk about public stocks, think SpaceX, Tesla, Nvidia, and let you know what the best AI stocks are for August this month. If you haven't grabbed those best AI stocks, there's 6 of them I picked for August. You can click that link in the description. selfadvisors.com/best will get you those stocks. That's selfadvisors.com/BEST, B as in best, E as in, is there a startup that starts with E? eToro, S as in self-advisors, and T as in terrific show today. So get that down below. We're going to have a lot of ads. We are not sponsored. We might be by Self-Advisors. If you'd like to sponsor or partner with us, email Sam, that's SAM, at selfadvisors.com to get that sponsorship cranking. This is a lot of really valuable CPM space for you. I mean, just imagine losing money on Meta, losing money on, God forbid, you're trying to run X ads, right? I mean, we love Elon, but that ad product is absolutely horrendous. The e-com guys can't make it work, as far as I can tell. Now, if you're doing some sort of like casino gambling type offer, maybe X ads are for you. But that's not us. We're not gambling. We are talking about stocks. These are legitimate, GAAP accounted securities. Talking about the Nvidias of the world, the SanDisks, GLD, having a little bit of a moment. Gold, the ETF. Take a look at that if that is for you. We're going to be taking a look at all of that and more in just a moment over our 3-hour show. We're also going to have live guests talking about venture capitalists. We're talking about investors, talking about conceivably market wizards. Think Lance Brightstein, who started off at the age of 20 in a small town just outside of New York City called Princeton, New Jersey. You might have heard of it, and has run up over the 50, now 100 million mark in gains from being a public markets investor solely. We're not talking about any pre-IPO deals, no SPVs, no special offshore vehicles to my knowledge. Although if he does have one, don't sue me, bro. It's probably, don't sue him either. It's probably kosher. That's what we're going to be talking about today. What stocks to buy, because that's what everyone wants to know. We don't always know, but we do talk about them. And you can listen to CNBC, you can listen to TBPN, you can listen to Jacob Calacanis. I can't even say his name with a straight face when we come to public equities because he already has told you what to buy. All right, you should have bought Uber 10 years ago. But let's get going. Let's look at some stocks and let's just get comfortable with this format because it's going to be an absolute shit show, excuse my language, as we get moving here. But what we want to do here is eventually have some guests, and eventually have some charts. If it doesn't completely ruin everything, we've got lighting, we've got audio, we've got X. YouTube would be great as well, just to know that that works. But it's interesting, the YouTube audience is more like the employed crowd. It's a crazy thing to say, right? You'd think X would be the employed crowd. Not really the case in my experience. YouTube, you're picking up more like the business owners, maybe they're from other countries where they don't live in a city where they just walk outside and they're just blasted with information. They can go out and grab a drink and, phi die, or they're not in some Murray Hill shithole apartment going out with the boys. We're talking about people living out on farms, people living in smaller cities who are looking for stock education, and they don't really want to watch Squawk Box. So that's sort of the audience. There's also an audience on X, of course. X is the town square, after all. A little more of a highbrow audience. Depending on how you classify that, you could say, well, these guys know all about Series X's. They know all about Stanford AI professors who invested in Google. They know the lore, all right? But do they have the ability to actually pick a stock? And then can we check in with them, a week later, a month later? Or are they going to, defray that responsibility and say, oh, actually, it's more of like a 10-year play, right? Which is the curse and blessing of venture capitals. You don't really know if you're right until a decade later, right? So that may be as it may. The audience might be totally different, and this entire format might completely change. But what I do know is that we're going to try to have live interaction here as well, and hopefully bring on some guests because talking about stocks for 3 hours is going to literally make my brain melt. I know Amit does it. He likes to yell at his computer, yell at his webcam, and Alex Karp seems to like it. Probably not, honestly, right? But people seem to like it who then invest in Palantir, and then Alex Karp likes that. So that's all gravy. But to get there, definitely going to have to find a format that's actually interesting enough to keep talking about, because the OpenRouter acquisition, I don't think it has any effect on public markets, really, unless you're buying these tiny AI stocks, the SoundHounds. SOUN is that ticker symbol, the BBAI, Big Bear AI. That's the sort of baby Palantir, the wannabe enterprise AI company. These are not, $10 billion market cap companies. These are just tiny little no-name companies that may become relevant, could become relevant, but honestly, it's pretty unlikely, right? That's why we tend to talk about billion-dollar plus market cap stocks. We're talking about PanW, Palo Alto Networks. We're not going to talk about the CEO of that company because I don't think we're at a place to even be fielding questions with someone of that caliber, right? We're going to be interviewing CEOs of companies in like Singapore, in like the UK, right? People who can't get on a podcast to save their life, right? Let's be real here. But in terms of investment opportunities, I'm here to answer questions. Otherwise, I'm going to get bored AF, right? Now, I could look at some different stocks, some tickers for you. I really honestly hate doing that. It's really unpleasant. I don't want to look at, the 17th OTC stock from some, Argentinian gold miner, right? Like, it might go up, it might not, I don't know. But there has to be some type of white space here. I just don't know what it is. Now, Nvidia, I did have it in the title, so we'll drop it here. It is at an interesting spot because it went up. You could talk about the $500 million financing deal, the roundtable with Apollo, KKR, and the other people who appear to be so dang important that forgetting their names is pretty much heresy. If you've tuned into different podcasts. That's pretty much the talk of the town. Does it really matter for anyone buying individual stocks? Not really, right? I mean, unless you're just going to buy one and sit on it for like 3 years, then maybe you're just going to go ham, absorbing all this information and then just closing your eyes uh, for the next 3 years. But that's not me. It sounds like a pretty crazy endeavor. Um, but we can give it a shot. So main opportunities here, software sector just went up. I actually think it's more likely to cool off right now. It is impressive after the whole SaaS apocalypse failure that there's so much strength. The Workday acquisition, I can't say that that actually fueled it, the Silver Lake buying Workday deal, because those stocks were already moving up so much. It doesn't really make sense, unless, of course, people know about that before it actually comes out, which people do. But I'm not here to blather about, insider trades. This isn't like Bloomberg or like some type of, you know, investigatory program here. We're just trying to trade the market. And so if you're trying to get into software stocks now, and that's all software stocks, by the way, I think it's a losing proposition personally. I think they're overbought. They're up a lot. Mongo, SAP, Autodesk, pretty much all of them are up so much over the past 2 weeks that they're taking a break today. I haven't checked my portfolio as of this afternoon, but as far as I can tell, they were definitely cooling off as of market open. So that doesn't seem like something that's at all a buying opportunity. If you're looking for buying opportunities, which you are, I think the more reasonable place to be, or scarier place to be if you're like at all on the short side, would be some of these bottomed memory names. So think Mu, think SanDisk, STX, pretty much anything tangentially related to memory. I haven't specifically looked at the DRAM ETF, but those are the kind of names that have so much strength that you do have to sort of raise your eyebrows and say, might not know what's going on here, but there could be an opportunity here with a tight stop to hop in with some portion of your portfolio. We got to offload the risk management part to you because that's the only way to do it. But realistically, like 2%, 5%, maybe 10. Like I know people were talking about a possible bull market breakout 2 days ago, and that's great. And all just by looking at the chart, it may look like a bull market, as in the candles are slowly sloping up, or when you wake up and look at your phone, it's higher than it was yesterday, slightly, but no one actually knows how to trade macro just by looking at the SPY. There's a little bit of a hint that, it looks a lot better than 2 weeks ago, after that Leopold-fueled unwind, but we're still not clearly in bear market or bull market territory. We're kind of in no man's land. So for that reason, there's not a lot to do, which is what is usually the case, and which is why having a 3-hour show seems so absolutely ridiculous to me. But there are people who do it. TBPN does it. I guess, Andrew Ross Sorkin blathers on for, gosh, at least 30 minutes. I have no idea. I only watch the clips, right? And not on purpose, it's just those are the names that are in this space. So if there is a name that you're looking at, maybe a space related name, go ahead and drop that in the comments as you come in, and we can take a look at it. Please, 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 no OTCs. But as wild as this can seem to be, 3 hours of talking seems to be the plan. I certainly don't want to do it, but I don't really know how else to approach this endeavor. So one thing we can do is have guests on. I did throw out some invites. Um, that would probably be the best thing to do. Have guests for 3 hours, so we don't have to look at tweets. But I guess that's the whole point of this: look at tweets, um, and then just chirp about them. I think I made it like 10 minutes in before, 15 minutes before I'm already looking at tweets. But looking at charts doesn't work. I've already known that. People don't really want to look at other people's charts, which makes a lot of sense. I don't want to look at other people's charts. Unless it's like Ariel Hernandez, and I'll look at his charts because he's trading with like 10, $15 million or something like that. Of course, if Chris Camillo did look at charts, we would look at, and we're sharing those, we could look at those. He was just coming off his massive Amazon trade. I don't think he has anything to say about Nvidia. In fact, Amazon is coming down a little bit. It doesn't look like a great dip opportunity to me. Microsoft cooling off a little bit too. Sometimes you see an earnings move and then a continuation, like Amazon initially did, like Nebius initially did. Nebius is that Neo Cloud company, NBIS, which was formerly a Bitcoin company. All these Bitcoin companies are pretty much doing horribly. Michael Saylor famously saying he would never sell Bitcoin, selling a lot of Bitcoin, like a lot, and Bitcoin just looking horrible. So all these former Bitcoin miners are leading into the AI compute sort of suction vacuum, massive opportunity, and saying, yep, that's what we do. Or, here's some actual revenue numbers in the case of Nebius. But the interesting part with revenue numbers is that's great if you're like a VC show or if you're like a fundamental investing show. But unless you have equity in the actual, like with lockups in the company, like you're not allowed to sell for 6 months. Honestly, who cares what the revenue is, right? Or the guidance, really. Like we're not buying long dated options here. I'm not. If you are, again, that's okay. There's a lot of strategies that do. Chris Camillo's strategy actually keeps rolling those options over. If you do go to selfadvisors.com/newsletter, you'll get the daily newsletter that I put out, but you'll also see the newsletters that I recommend. So some of those are option related, gold related, and just market environment related. So some people are not like gold bugs or, options addicts or whatever you want to call them. They're just market participants, right? They might have a job and then they look at the market because for whatever reason, they might like their self-advisor. They might be their own self-advisor, but they don't want to just throw it in SPY or VOO or 2x leverage SPY, like Graham Stephan recommends. And they want to look at stocks. If that's you, that's where you want to be. Selfadvisors.com/subscribe. Click that link in the description. You can get those best 6 AI stocks and they will get sent immediately to your inbox. I'm not going to tell you what they are, but they're good and they're AI related, right? So that's where you want to be. And I actually signed up for ChatGPT Go. It's $8 a month. It's changed my life. I mean, I could have signed up for anything. I could have signed up, and I have before signed up for Claude, the $20 a month one. I haven't paid Gemini anything. I haven't paid Grok anything. Grok's like pretty hit or miss, right? It's like very on brand with X or Elon. like if you're trying to write something, I wouldn't put it anywhere near Grok, right? I also wouldn't put it anywhere near Gemini. Um, some people say Gemini is sort of sensationalistic, which may be what you're looking for if you're trying to write something that people actually look at, unless you have a pre-existing uh, following or mechanism, more often the case these days, where you make a piece of content, you put it out there, and someone tags you or you tag them, or it gets shared around. That's why people do interviews, right? Because they don't have to actually play to an algorithm. It's just the person who they interview then shares it. And then people say, oh, there's the person who I follow. I'll listen to what they got to say. Who's that, you know, rando interviewing them? And then if they see them like 10 times, they're like, oh, fine, I'll follow the rando. So that's sort of how that works, as far as I can tell. But as far as ChatGPT, it's incredible. And I'm not talking about Codex. I'm not talking about whatever the Claude one is, Claude Code, right? I'm talking about just chat.com. Just having it help with automations. I was trying to build, this is the classic use case, the Harry Stebbings 20 VC trope, right? Rory O'Driscoll. Does he have an O as his name? He is Irish, right? Jason Lemkin. Their topic du jour of every jour is AI is just going to lead all these companies to build their own CRMs, right? And so all these CRM companies, HubSpot should be shaking in their boots. Salesforce, which serves an upmarket customer who's probably not going to vibe code their own CRM, right? But definitely HubSpot is vulnerable, right? Because anyone who's been ripping all these AI videos, watching Dan Martell, watching maybe Adam Robinson from retention.com, the 30 million ARR sort of marketing data company where you go to a website and then you're hanging out in your inbox, reading your New York Times or your Wall Street Journal 10-pointer from Bloomberg, and you get an email from the website that you just went to. And it happened because there was some data magic, some maugery going on there, and they're allowed to send you an email. They actually are, presuming that you accepted a privacy policy on that website, somehow creating some sort of data matching, where they're able to date that you went there on that visit, and they can send you an email. That's actually totally compliant. And that's a 30 million ARR company. But we got real off track here. So those are people who are all talking about AI, right? We're talking about making content. Content is probably the word that most makes me hate doing anything video, audio related. But the fact is, if you're not talking to mass market, if you're not doing one-to-many communication, you're not really talking, right? Because you could be writing a newsletter, you could be writing a newsletter with words, right? Not writing with Claude, not writing with ChatGPT, not using Gemini, not using Grok, not using Meta AI. Does anyone use Meta AI? I think you have to log in before you even get to Meta AI, which is a real sort of vibe killer. So if you're actually writing, which I guess has value if you're doing some type of investigative reporting where you know something or you heard something and you can write it out. But otherwise, writing is pretty much dead, right? Writing's dead, because these frontier labs is a fancy word, right? The LLMs are so good at it, right? They're not like going to write something that is going to win the next Pulitzer Prize, right? They might not even get you a Rhodes Scholarship, right? If you use it to write your application or your essay, but they will do like 95% as good as a person. So the point is, I'm pretty sure that all of this whole one-to-many communication is going to be the only thing going forward. And videos, unfortunately, if you don't like video, and using the word content, going to be the only way to do it. So live is a new format. It's definitely slow to take off. You do need some sort of studio. This is about as bare bones as it gets. Think like more ramshackle than Theo Vaughn, right? I mean, this was actually pretty expensive. This was like 15 bucks or maybe more, 30 bucks to print this out. It's a big deal, right? It costs a lot. But really all you need is some lights, a microphone. This isn't even a great microphone. It's actually it's meant for like an iPhone, so you can go outside, and it actually has a transmitter. So it's not actually, it can be Bluetooth, but when you use it as a Bluetooth microphone, it actually does horrible. So what does work well is when you use it as a like transmit mode. So you plug a little thing into your iPhone, and that actually does work well. So if you're in the market for an iPhone, you're trying to get in this one-to-many content lifestyle, that's what you need, right? Without a doubt. Like, just bare bones, step one. If you just start talking in front of, Gary Vee style with your iPhone, like, it's great that he does that and his 400 employees, like, chop up all of his garbage takes and distribute them. I love you, Gary Vee. But that's not you, right? That's not going to be, unless you got on TikTok in 2018, right? Or, YouTube in 2010. It's just not going to work, right? Especially if you're doing B2B, that's even worse because you're not worth listening to on your own, right? People are like searching for you, and they might search for you weeks down the road or months down the road. So that's the whole game, right? And as far as the vibe coding the CRM, though, which is where we were all starting, it's doable. I mean, my CRM, I can't sell it to other people. I don't have a login. I don't have I'm not even using tokens. When I use ChatGPT and I ask it, hey, chat, I don't call it chat. I don't even say, hey. I usually call it bro, actually, and then use all caps when it repeats stuff too often and is too safe. Because ChatGPT, it'll do something for you. It won't remember what it did, and then it will ask you to send it screenshots of what you just did, even though you already gave it a screenshot and it already has the information. It's slow. It's so frustrating to work with that the only thing more frustrating than working with it to vibe code your own CRM is actually working with a human. I think. I mean, unless you're paying someone like a couple $100,000 or something, or maybe less if they have some sort of, family tie that makes them, need to live in some low cost of living place, and they're just very good at programming. But barring that, it's better. It is better than working with, a junior programmer. Like, you can see how young people are not having an on-ramp into software jobs. Like, it's very clear once you start. As someone who, I do have a kind of a software background, kind of, but I wouldn't get hired, and I haven't gotten hired at the places you would think of as the software powerhouses, the Metas, the Googles, or in this day and age, that would be, right, maybe Stripe, maybe Airbnb. No, I'm still thinking 5-8 years ago. You tell me who it is now. But basically the YC companies that made it, maybe OpenRouter now. If you can't get hired at OpenRouter, you can still use ChatGPT. You can use OpenRouter to pretty much code anything you want It's a personal project that you're not going to sell. It doesn't have any login, and it's not going to generate a token in the sense of storing some sort of piece of ID, piece of information about the user. You just need it to do something, and you were using a spreadsheet before, which is how people get into using a CRM. It's how well, not really, because I was already using SendGrid, which is email service provider, right? But if you need a CRM, it's true. These companies, the HubSpots of the world, are going to have some tough times if they don't find a way to go one to many, and you see them buying The Hustle, buying Starter Story, buying all these media platforms to get in front of people who are basically trying to make them redundant, to basically kill HubSpot, do their own CRM without paying for HubSpot. I mean, maybe once you get up to like $1 million ARR company where you're spending, let's say, at least $10,000 a month on software, at least, then HubSpot's a no-brainer. Maybe that's the case, but from what I've heard, I mean, and we can get Brian Halligan on here if he's not, doing some summer snowmobiling or wakeboarding or something dangerous. Most people say HubSpot, the word on the street is it just has too many features, or it's like the Frankenstein of SMB CRM software. It might be the only real SMB CRM software as well, so there might not be an option to do anything else. But the point is, HUBS, the stock, if you're trying to buy HUBS, I don't know if now's the time, right? And that's not even looking at the price. I mean, the price after the recent bump in hubs, in CRM, ADBE, right? CRM is the Salesforce ticker, ADB is Adobe. MongoDB, full disclosure, I am short MongoDB as of right now. But software names in general don't seem like a great opportunity here. But the two ways to look at it is what I just talked about. Do it yourself. Go vibe code your own CRM. See how far you get until you're right back on HubSpot.com/pricing or whatever their pricing page is. Or two, look at the stock charts and say, okay, Workday had a massive bump up in valuation from getting acquired by Silver Lake. But if you look at the next day, it did cool off a little bit. Typically with acquisitions, mergers, and take privates, right? They're typically, not always, above the current stock price. So the price of Workday, WKDAY is the ticker. That's a lot of letters. WDAY, I think, is the ticker. WDAY, Workday. The price it's currently at is higher than what it was at, which reflects the acquisition. And that did help, maybe gave a final little bump to software, but realistically, and so often this is the case with the markets, an event like that, or an event explained by a headline like that, software is having a huge run. Look at this Workday acquisition as an example. Well, software already had a run coming into that acquisition. Okay, that was sort of the sell the news event. And I think we can look at the market, putting myself out on a limb here. Software is cooling off a little bit over at least the next few days. Maybe it's fine. Maybe it's at a new equilibrium up here. And, again, we're talking about CRM, WDAY, ADBE, HUBS, although frankly, I haven't looked at HUBS or Adobe recently as to what the prices look like. But I know SAP is up a lot. Autodesk is up a lot. These stocks have gone on an absolute tear over the last few weeks. And to hammer home this point, yes, it could be the case that they establish a new ground level up here due to the Workday acquisition being such a good sign. But it could be that this acquisition was just private equity, not thinking about, is Workday a great example of software? Are we going all in on software? It might just be private equity saying, this company is worth more than it got pummeled down to. We don't have to hold it for 10 years. Maybe we can hold it now and flip it in a couple of years. I don't know who their connections are, what their plans are. They may have no plans of actually growing or even holding the company. So it's TBD, but people are definitely talking about it. And by people, I'm talking about people who watch the markets, because it does show up. When you wake up at 9 a.m. and you look at what stocks are moving, you're going to notice acquisitions. You're going to notice mergers. WDAY is up a lot. Oh, maybe I should buy it. No, don't buy it. It just got acquired, right? And it actually cooled off when the market opened. So that world collides with the private company world, the venture capital world. And often the explanations, the venture capital explanations, oh, the Workday acquisition is evidence, is wind in the sails of all of these SaaS companies coming back. The SaaS apocalypse is over. That could be the case, but more likely it's just a one-off. And if you're trying to be a public markets investor, you're trying to buy and sell stocks, I don't see any reason that this is the time to get into software. Personally, I don't. Now, there are some stocks that I do think look interesting, and I've talked about them ad nauseum on this channel. You know the link. They're my best 6 AI stocks for August, updated for August, and you can get those at selfadvisors.com/subscribe. selfadvisors.com/subscribe or selfadvisors.com/newsletter. Whatever link is in the description. I know I put it there a few times. But if you're just listening and you are just here for the stocks, which most people are, right? They just drop in, hey, I wonder if there's any stock ideas here. That's the stock idea. Don't worry, I do that too. selfadvisors.com/subscribe. That's where you'll get those ideas. And you'll also get my recommended newsletters about gold, newsletters about, well, not just gold, but probably Mag 7 stocks. You're going to see some recommendations there. Definitely options. You're going to see some recommendations there. So basically whatever your taste is, there's an option for you. So that's basically how this newsletter game works. Is I don't know who you are, but I know that you're interested in the market. And so I'm just going to give you a buffet and you can take whatever newsletter works for you. So that's my rant on software. We've already ranted about TBN. Dang, it's a long name. It's a lot of letters in that name. I know it's a great domain name and all, but I mean, gosh, it could use a consonant or two, or a vowel or two, whatever the one is that they don't have. We talked about 20VC. We talked about Harry Stebbings and his fathers, his round table, his uncles, crazy uncles. We talked about HubSpot, Brian Halligan's acquisitions and CRM value prop in the vibe coding age. And again, we talked about software. Should you buy software? Is now the time to buy software? Just because Workday got acquired, does that mean software is back? And what we're also here to do is listen to your questions. So if you're new here, how we do that is, well, you just pop your questions in the chat. And in fact, what we can do here with this fancy one-to-many technology here is I can actually pull up your stock on my computer right here. You can't see it here, but believe it or not, I have a computer here. Makes a lot of sense, right? And so we'll be able to pull that right up for you here. So that's what I would recommend to you if you're just checking out this live for the first time. This is a 3-hour live, very manageable, bite-size, little drop-in live. If you're looking at the market, if you're managing a portfolio of your own or other people's money, right? Institutions, if you've got limited partners, if you've got general partners and you are the limited partner, if you've got beneficiaries and you're managing theirs, whatever GP, LP, MP materials sort of MO you've got going on, this is the channel for you. And we've got those best 6 AI stocks in the description. So check those out as well. But right now, we are just going to be focusing on any type of sector that I think is strong. Because if you're a short seller, right, and I'm not saying you are watching this, in fact, 95% or more of people watching this are not, right? They're looking for long ideas. But what happens, that's pretty important, is if you can figure out what stocks not to buy, then figuring out what stocks to buy gets a lot easier. So I'm not saying to short. I don't recommend it. I don't recommend it. Okay. I might be wearing a short selling broker sweatshirt and hat. Okay. But a lot of long short funds, well, they're called long short funds for a reason. They go both long and short. So if you look at a channel like Ariel Hernandez, you look at a Chris Camillo, the Jack Schwager market wizard who turned $20,000 into about $3 million in 3 years. According to Jack Selby, according to Iced Coffee Hour, took 20,000, turned it into what would have been 700 million had he not taken the money out along the way. Okay, so he actually turned it into like 80 million because he took money out to buy lunch and stuff like that and pay taxes. Okay, but the way he made his first big windfall was kind of shorting. He doesn't like to talk about it. People don't want to talk about buying puts, buying options that increase in value when the stock goes down. But that is what he did in 2020, in that famous time in 2020 in March, when the stock market went down so fast, so quickly. And I think he made about $20 million. So if options are for you, we're not just going to totally ride off of Chris Camillo's result, because I'm sure he doesn't want all of you to be trading, investing, using options, but people ask about it. So, what is a live host to do, right? So if you want my best 6 AI stocks, they are all optionable. These are all options that are 1 billion plus market cap and above to trade with equity or other financial instruments, derivatives. Head over to selfadvisors.com/newsletter in the description. Self-advisors with that sort of British .com/newsletter. You can get that daily newsletter. You get those recommended newsletters as well. You click the box and then you sign up. It's not like just going to send you a bunch of newsletters just because you wanted the stocks. No, this is opt-in technology here. Now, as far as other sectors that people are interested in, there's a lot that are not worth talking about at all. Really? A ton, actually. When I generally look at the market, and I'm not like Mr. Market Genius or anything here, but in general, you can get a pretty good idea of what's going on in the market if you just look at SPY, right? SPY. Pretty much all of your brokers, Robinhood, Webull, Schwab, TradeStation, Ninja Trader. I'm running out of really big ones here. That's a lot of big ones, right? Public.com. They're a good sponsor, possibly. If you go to any of those and you type in SPY, pretty sure it's the same actually every broker. Don't quote me on that, but SPY, that's the market, right? When we talk about the market, that's pretty much what people are talking about. Is it 40% Mag 7 stocks, right? Let's see if we can name the Mag 7. Meta, Amazon, Apple, Google, Tesla, oh God, Microsoft, Netflix. Is that the Mag 7? I think it's pretty close. They make up 40% of the market, right? So when people talk about, when the Wall Street Journal, God forbid you have to read the Wall Street Journal to figure out what investments to make, but it's nice to have a big brand like that to throw out, isn't it? People who pick stocks don't do as well as people who just buy the Mag 7, right? That's what is always the downfall of individual stock picking. We all know that. Everybody who is really deep in this knows that. The problem is sometimes Mag 7 stocks don't do so great, right? Sure, Amazon just had a great earnings. Google actually sold off on earnings. And sure, Stanley Druckenmiller and Warren Buffett bought Google. They just bought Google. They didn't just buy Google. Their buys were actually months ago. We just found out about them now because of how the reporting requirements are. We don't get to find out when holders of 5% or more of these big billion-dollar company equity stakes get purchased. That's the reporting requirement. I believe it's 5%. Could be wrong. It's a lot, right? If you're buying 5% of Google, that's a lot. We don't find out about those buys until months later. And the only reason we do is because that's required, right? They don't want us to know. Warren Buffett doesn't need to tell you he bought Google. Stanley Druckenmiller. And if you don't know who Stanley Druckenmiller is, he's like the Warren Buffett of hedge funds. Okay. So we know that. That's exciting to hear about all these buys coming out. But in general, is it really that useful? Probably not, right? There's so much liquidity in Google on a week-by-week basis, a day-by-day basis, that, you know, do you really need to worry about what Warren Buffett's 5-year view is, you know, on Google? No, you don't. It might not even be his view. It might be Berkshire Hathaway's CEO's view. The name escapes me. I may not have even ever learned his name. You know, the hot manager is what people want to hear from. You know, we want to hear from Cathie Wood in 2021 after Tesla just went up, you know, 1,300% or whatever percent it was. But then, you know, ARK fund, Cathie Wood's fund goes down after that. So the reality is you have to be your own advisor. You have to self-advise. And you can't rely on these massive influential people. Like, don't worry, Warren Buffett, we're not going to call you, I'm not going to call you an influencer, but maybe you want to be, you know, when you're saying about how, you know, you only eat, you know, saltines and stuff and you drive a car from 1950 or whatever. Those buys are not that important. When those, they call them 13 Fs come out, it's just not that important. It's just not. The same thing when, you know, Gavin Baker's 13F comes out, you know, whatever. We don't see his K1s. We don't get to see what his private investments are doing, right? The only reason we see that he owns SpaceX is because it went public. We also know he bought SpaceX in, you know, whenever, 2015 or something, whatever like Series B is or whatever. A, I don't know. Pretty early, right? So the amount of information that's actually useful to you as a public markets investor that gets widely shared is pretty much no. It's not a lot. I mean, using your eyes is pretty much as good as it gets. And the dance here is that everyone looks at charts a little differently. And so what we end up talking about is these big guys, the David Teppers, Peter Thiel had a recent buy of this Argentinian company. I guess he put 18% of one of his funds into that company. And even that statement, like 18% of one of his funds, what does that mean? Who cares? You know, if I think it's like maybe like a $20 million position, you know, so it's maybe $100 million dollar fund. Again, don't quote me on that. I don't think it's a huge position. How many $100 million funds is Peter Thiel general partner of, or a limited partner of, I guess is the right word, right? I guess this isn't TBPN, otherwise I would be only using the acronyms. But the reason why we look at these people at all really has nothing to do with their public markets performance, interestingly, right? Thiel Macro, which was a macro fund Peter Thiel had, I think most people are widely on the same page that that didn't go so hot. And if it wasn't that one, it may have been the one before, not Mithril, which is the private one, but the public ones, I think, didn't go so well for other reasons. Now, it's not like these funds are all bad. A lot of them create managers that go on to manage new funds, and some of them do well. Some of them do well privately. Some of them do well publicly, and we might not exactly be able to follow how well they do because some of the stakes might be below 5% in some of these companies. So yes, Peter Thiel was the angel investor in Facebook in 2005, maybe. No, that doesn't really mean anything for what his current buys are, unless you're strictly following Argentinian equities, which 99% of people, they just want to know if they should buy Nvidia or not, right? That's why it's in the headline, right? Is Nvidia the number one stock to buy? So the question you have to ask yourself is, with all these big names buying stocks, what kind of stock is actually interesting to you? And for most people, they're going to derive more information by looking at an actual chart, making a decision, putting a little bit of money behind it, and then seeing if it works or not over whatever time period they had planned for. Of course, the shorter turnaround time periods, the quicker your feedback loop gets, okay? In theory, that statement is true, okay? In theory, right? In reality, that statement becomes really untrue when people take that to its extreme and they say, okay, well, I guess I'll just buy. And I'm not talking about high frequency trading because most people are not selling within a second. They're a little more informed than that, and they want to at least wait a few minutes or something like that, right? But when you get into stocks below a market cap, you're dealing with a set of players, a market of buyers and sellers that is really unknown to you and potentially a very small pool of people, which is not really a learnable environment. So that's why we talk about stocks over $1 billion market cap. And that's why we look at time periods over 5 minutes in general. There are exceptions. I'm sure if you went to some of those recommended newsletters at selfadvisors.com/subscribe, selfadvisor.com/subscribe to get those best 6 AI stocks in the subscription. In the description for that subscription, you can unsubscribe at any time. But you do get the 6 best stocks, and you get a daily newsletter and the opportunity to see other newsletters I recommend. Most people are looking for stocks over more than a 5-minute period of time, okay? Which is smart. Quick options opportunities on Tesla at market open, for example. Does that present an opportunity? Maybe, right? Maybe in certain scenarios when all you do is look at Tesla option prices, and if you look at them every day, maybe you have an edge there that changes day by day because of the liquidity, because of how many options are at each strike price, how many buyers and sellers are at each strike price. But for most people, that's not the corner of the market they want to corner, right? They want to have a broad view. They want to take a disciplined bet on an individual stock, and they have a time period longer than 5 minutes, potentially longer than 5 days. If you're a TBPN viewer, you have a time period of maybe 5 years, but you're also probably not trading or investing in public equities because you don't have to. But you have a period of time over which the actual fundamentals of what's happening with the company matter. And I know that seems like a crazy statement for people who are day trading or used to companies under $1 billion market cap or story stocks. I mean, in 2021, it didn't really matter what the companies were doing, right? They were going up, at least until March, right? There was a little bit of a cool off, if I remember correctly, okay? There's going to be some fundamentals involved, but to get too wedded to fundamentals or too wedded to technicals is a real problem. That's also true. So there's probably some white space in there that makes sense, that is worth you finding a strategy that works for you. Some combination of fundamental and looking at an actual chart and saying, is this actually worth buying or selling? If you sell first and buy later, as they say, which you could say is a put option or shorting. So as we're coming up on an hour here, I'm absolutely impressed with TBPN. I could see how talking to someone during the 3 hours could definitely make 3 hours go by quicker. I could also see how having a guest could make 3 hours go by quicker. What I can't really see yet is how people actually watch for 3 hours or tune in for 3 hours. That part makes zero sense to me. But what we do know about TBPN is people actually don't tune in for 3 hours or 2 hours or even 1 hour. In my understanding, right? Because how often do you look at YouTube and you see on TBPN with a little red circle flashing? Sometimes it's flashing on John Coogan's YouTube as well. Maybe always. So he has some sort of streaming capability to both of them, some type of wizardry, right? Which I don't know if he's hedging his TBPN bet in case, Jordy gets a deal with Tucker Carlson or something, or if that's just how his tech was set up before he started TBPN. But the point is, people are not watching the whole 3 hours, right? Similar to maybe a Steve Tan type of approach, or maybe a Jack, whoever the Jack who interviews people really seriously. He has the podcast, the Jack something podcast, the approach that he takes. He's got like the curly hair. He kind of looks like if George Washington were born today. That guy, Jack Neal, he doesn't do 3 hours either. 3 hours is a long time. But what he does do is he asks questions to make clips. And then those clips are viewed by other people at a later time. So in little diet pieces. So that part makes a lot of sense. Although even the diet pieces, I'm not even really convinced people are watching those. Some of them people definitely do watch, when there's a certain event, when I think one of their claims to high viewership was the interview of the software engineer who had like 4 or 5 different remote jobs at once. People really, you could see how that's very broad appeal. That could do well on YouTube. But in general, the clips, I think the real purpose of those, correct me if I'm wrong, is so then they can share that on Twitter, on X, and the person who did the interview can then share it as well. So it's kind of like a little gift, like a little parting gift. Like, thanks for coming. And also the reason they might get on in the first place, more than likely the reason they come on in the first place is they also know people are not watching 3 hours. People might not even click into the live stream and go to the actual minutes that they were interviewed. They might just go to that interviewee's profile on LinkedIn or on x.com and then view a portion of the clip, the diet offering. So that's my understanding of what's going on here. I know there's shorts and whatnot, which are maybe just a little top of mind device. It never hurts. You're like, it's 8 p.m. on a Friday night and you don't have plans. And if you're me, it's like you suddenly find yourself sometimes, quite oftentimes, watching some sort of 6-minute, I almost said TikTok, but a clip. So a YouTube short or some type of short video, maybe a Facebook, that would be a similar type of demographic to the middle-aged man that frequents X, right? A Facebook reel, maybe an IG reel, but that's kind of, that's for women for the most part, right? Or people who are like happy a lot, optimistic people. But that's pretty much the 3-hour model as far as I can tell. Because as far as actually having a show that's worth watching for 3 hours, that's like completely impossible. So I think what it really is, and it's all great to think, but it's even better to do things, is you have a set, right? This is not a set. Like, this is not, having someone on this is maybe fine if your net worth is $1 billion, because then you can do a Zoom and people are just happy to get some Zoom time with you and then to have their face, pasted next to your face on the thumbnail, or they can share a piece of that interview and their faces are together. It's kind of like you've known the person forever, even though, you just somehow magically got on a meeting with them, right? It's like having a meeting with them that suddenly makes it look like you've known them forever. People might see that meeting a couple years from now on YouTube. Probably not on X, because there's no real future discoverability there, unless the billionaire says something really crazy, egregious, and then maybe it gets resurfaced on X. But pretty much the model, as far as I can tell, and I know Jordy's the brand guy here, John is more like the loose cannon. You could say each of them are the reason that TBPN exists. Maybe John is more like, mastermind lore 37-year-old, right? Like the reason they get on the show, and Jordy's more like the reason there is a show at all, with like advertisers and, keeping everyone on topic and on pace and short and sweet, you could say. But that's what I see. And the only reason I could even feel comfortable sitting on here ranting for 3 hours after their recent vacation is, number one, knowing that I'm doing this live on YouTube, right? And X is great. X recently has new live streaming capabilities. I see Thread Guy all the time on X streaming. I see Wolf Financial. That's like a pretty good markets live. I see maybe Investor Nick. I think he's like one of the few futures traders that people actually look to in a positive light, right? Who are also out there Like that Venn diagram is very small of out there and also viewed in a positive light, and futures. I guess there's 3 circles in that Venn diagram. I really should have like a marker or something here, but you get the idea. Jason Shapiro of Crowded Market Report, maybe also in that category, but not doing the live so much, more of a, recap. He's like got the depth of experience that you kind of actually want, which is rare. You want that guy clicking through some charts. You don't want to hear him just talking. You want to hear him maybe not pointing because he's talking about, I think he is maybe managing like $100 million, right? So when he's talking about this is not a time to short the market, which he's pretty much talking about every day, right? That doesn't necessarily mean it's not a time to short stocks or certain sectors or a certain stock. But it is nice to have that type of broad view of the market and to hear his insights, because although it's often not the case that bonds go down when stocks go up or the dollar goes down, when inflation does this or foreign currencies do this, the Swiss franc, just to hear that there could be a connection there and that there is a connection sometimes, and to hear when it does apply, and in most cases when it doesn't, it certainly feels useful. I don't know if it is useful, but it is someone who is managing quite a lot of money and showing you, building in public, you could say. So that's one. And then Ariel Hernandez is another one. He does the lives every day, sort of picking up the torch from Christian Kualamagi, the Swedish sensation, who is probably enjoying some Mai Tais on a boat, maybe over near Trondheim or Fredericksburg. I don't know all of I'm not real Scandinavian native, but the guy, Ariel, is very good at being engaging and showing up daily to both answer a ton of questions, which is incredible, but also doing the market recap in a style of Jason Shapiro. So those are 2 big, great resources. But again, definitely not doing a 3-hour live stream. So 3 hours is a long time. It's almost reminiscent of a live selling, like a whatnot type environment, where you're pulling up stocks and saying, hey, what about this? What about that? Oh, this one's on auction. We only have, 1 million shares left of this one, and the price is going up. Don't buy it, even though you might feel FOMO, it's kind of the same thing. But that's pretty much as I see it, the TBN format, the live, the studio, which does need some work, the outreach, which needs a lot of work, more than just tagging people in an X post or ranting about them in a YouTube video. But having someone on the program, I think, is going to be a big, big upgrade. Might take some time, but I hesitate to start looking at stocks because I know how that goes, right? When I look at stocks, when I'm on TradingView, when I'm on FinViz, when I'm on whatever stock charting platform I use, it's not the one you use more often than not, Robinhood Legend, right? It's just unnerving because you get used to your own, maybe you look at Webull. When I look at other people looking at Webull, I don't use Webull, right? Maybe I will start using it. I'll get comfortable with it. But for the most part, it's kind of grating, disorienting to look at someone else's charts. And looking at your own chart setup is just a smoother way. And just hearing what sectors people are looking at is helpful. Because I know if I'm hearing someone talking about SanDisk, pay attention, be careful if you're shorting it. And also be careful potentially if you're longing it, because there are times when people have talked up a stock and it's because of an earnings number coming out. It's not based on the actual reaction of the stock. So another sort of myth of the market is that a great earnings number makes the stock go up. And what happens is expectations can be baked into that earnings number where people buy the stock because the earnings number was above the expected earnings. The earnings per share beat the expected earnings, and then the stock goes down because, well, one, it might just be an opportunity for a big fund to sell into that spike of people buying, or two, it might have sort of been expected that the company's already doing well. So the actual expected earnings per share number that analysts put out might differ from the sort of expectation that big funds have. And when I say big funds, I don't really know what I'm talking about when I'm talking about large numbers of hedge funds, whether I'm talking about family offices, whatever I'm talking about, the market collectively. If they have an expectation that is already in line with a good earnings, the stock can go down, regardless even of if there's a large player selling into it, additionally, just looking to unload on the good news. So for that reason, it's a very, very counterintuitive talking about any specific earnings. And I know it happens on here every single day, especially when Palantir earnings happen or Tesla earnings happen, or, oh, I wonder what delivery numbers are going to be, or, oh, I wonder what, humanoid this, what, color lapel Elon's wearing on his polo shirt, whatever weird stuff people are up to these days. It's really just chatter that has no bearing on, for the most part, unless you are someone who has been listening to these calls for like 15 years, like a Chris Camillo. It's not really something to read into. It might be fun, but it's not fun to me because I don't see a way that's efficient to get an alpha, to get an advantage from that type of information. It's certainly communal to listen to someone talk about earnings for an hour because everyone just has to listen and then there's nothing to do. And so you're chatting back and forth in the live chat. Oh, do you think he's going to talk about this? Do you think he's going to talk about that? Oh, is this analyst going to ask a certain question? Oh, is the CFO stuttering? It's not like all these earnings calls are, Jeffrey Skilling on the Enron earnings call. Most of these are pretty darn boring, right? Which is why they have the reports. And then you can just take the report these days and you can throw it in ChatGPT and basically tell me what happened. But the people were really good. Yes, they want to hear the inflections on the answers to certain questions. But that's really only if you've been doing this for like 15 years or more, right? And maybe that's a skill you want to develop. But to me, it seems like not a good return on effort, right? Assuming you're even able to glean anything from that information, most of the information of the price is pretty much baked into the chart, in my opinion, in my experience. And if you're managing more than $1 billion, and by managing more than $1 billion in the public markets, I mean, you actually have to put it to work. You actually have to buy, hold $500 million or more of stock on a day-by-day basis, on a quarter-by-quarter basis, then look, I don't know that listening to earnings calls has any point for you at all. That's just personally how I feel. And I know everyone on x.com, everyone on youtube.com, hour by hour, day by day. We'll talk about the next earnings call, but for the most part, those events are just not that interesting. But that seems like a lot of ranting. That's what we're doing here. We're ranting, but we do have another hour and 45 minutes left of ranting. So if we can get someone else in the comments, that's going to be like a major breakthrough moment. I can already tell. Now, I think one of the other challenges is I'm pretty sure this Restream logo. I think this is a real problem. I could be wrong. This could be totally an ego thing, but I think this Restream logo on the thumbnail on the YouTube is a serious problem because it makes it look like this live stream has already streamed, right? It's not a good thing. I mean, on X, I'm pretty sure the people who watch on X are just bots. Like, I've never had an interaction on X that's been with a real person on a live stream. I just posted in the comments at 2 o'clock here. Well, it's not 2 o'clock now. It's like 3:15 p.m. I just posted drop your ticker on X. So we'll see if any of these people are real. But I don't think they're real. I think on YouTube as well, some of the people are not real. But at least when you do a quick stream, like a 30-minute stream, sometimes you do get someone watching your stream. Generally, though, the real pickup comes after, like when you've already finished the stream, and then it disseminates the stream to other people. And the problem with a big long stream like this that's human done, like this is just me talking. I don't have a script, as you can tell. I'm barely even looking at the camera most of the time. Most of the time I am, but I did just take a little bit of a break here. It's not very comfortable sitting for 3 hours. I can see why sometimes those guys shift around. I think John definitely shifts around some. Jordy has sort of a slouch to him, I think, kind of like a Formula One slouch, where maybe he's able to get more settled in for the 3 hours, but gosh, it's a long time. Looking at tickers is probably going to be sort of the main entree if we're to take a Zip Trader Charlie approach, you know, or a Felix and Friends Goat Academy or a Meet Kevin approach. Looking at ticker as a money vest approach, maybe a Trade Brigade stocked up, Ben Felix, maybe a Market Beat, maybe a you know, there's a lot of different YouTube channels out there to borrow from. Maybe a Ross Gibbons approach, a lot of people sharing their screen talking about stocks daily who can give ideas. But in terms of shareable, quick little clips, what's the real challenge is finding something worth clipping. And so to get it in front of someone, normally I think what those TBPN people do is, well, they just literally talk about the company and then they tag the company, or they'll put the company's logo in the short, like 20VC might put the company's logo in that very beginning chopped up edit part, you know, the hype reel before the actual podcast part. And that can help, but the content, what you're actually talking about, unless you're just going to be totally off the rails on a daily basis, which interestingly is not actually a very, I mean, unless you're taking like a Porter Stansberry approach where you're creating, you know, sowing rage in order to then, you know, tease out people who are magnetized by that polarizing approach and then they buy something from you or join your investing club, you know, that's an angle. But for most people, that's kind of a losing proposition in terms of losing viewership and losing audience, and ultimately losing leads, and ultimately losing returning audience, and ultimately like and so forth. I can just say the word sales, right? They're not going to buy anything from you. But whether they buy something from you or whether they see a brand up here, public.com, whatever it is that turns someone off from re-engaging with your many-to-one, your one-to-many, many-to-one would be sort of if I had someone else here and we were having a conversation and only one person was watching, then it would be many-to-one. Let's hope it's not that. No, one-to-many, that is why being more serious, and I'm not even sure being serious includes wearing a sweatshirt, although there is a logo on here, and this is seriously my name. Like changing, this would be a real bummer because I'd have to go print it out. I'd have to go to CVS again, and I specifically chose this sort of weathered look. It's got kind of like a Theo Von meets Joe Rogan meets like Oxford, England, meets like Robin Hood, like literally Robin Hood the book or the movie or whatever, meets like Appalachia look. Anyway, there's a lot going on here is all I'm saying. So our task today is what kind of company would engage with a product like this, right? And generally we're talking about, well, companies that do stocks. So if you do stocks, if you're trying to buy stocks, if you're a company of one, join our company and find some company here on the Sam Putnam channel, the Self-Advisors channel. We're looking at all types of equities here. We've already talked about OpenRouter, which is in the title. We've already reached out to some potential future guests, tagged them. We've already talked about the overbought software sector. Overbought. Can you believe? Overbought. Even after the Workday acquisition from Silver Lake Partners. Software, is it overbought? Well, it was quite a bounce, I'll tell you that. And if you're trying to position right now after this massive bounce, and you can look at the charts to double check this, but those stocks are uppity up, and they need to go sideways right now, in my opinion, to really be worth looking at all. So, in my opinion, the only thing that's really worth looking at is the memory names right now. And if you're not familiar with the memory names, that's SanDisk, that's SNDK, that's Micron MU, that's Seagate STX, whatever memory name you look at, DRAM, ETF, DRAM, memory, guys. I think it's called Round Hill or something. Memory is where the eyeballs are at. And we can look at the charts. We can peek in. In fact, what might happen is the charts might be the only thing that actually draws people into a live conversation. I actually wouldn't be surprised by that. It's interesting. You talk about, they're recorded videos, when I'm reading off a script and not talking in this sort of like flowing, wavy cadence of saying a few words and pausing and saying a few words. When I'm more just talking about the best time to buy a stock and using the script from the teleprompter, which I have, fed in some information into. I certainly have an idea of what I'm going to say, but I don't know everything I'm going to say. But with inflation expectations raising due to the CPI on Wednesday, you have to wonder, that type of cadence is actually much more digestible to a recorded audience. Whereas when you're just going live and just riffing, having charts might actually be better, which is interesting. It's sort of backwards, you could say, from what you'd expect. But for all you chart heads, for all you chart knuckleheads, we'll jump into some charts here. We were able to make it almost an hour and a half with charts, which I think is pretty incredible. To sort of just off the dome, make it an hour and a half. I certainly wouldn't recommend it. It's not for the faint of heart. It's almost like a job. Hopefully it is a job. But without viewers, I think we have to resort to the last resort, which is going to be the charts. So let's take a look at some charts, and let's switch this whole display here so that we can get a slightly better, better view here. I don't think it really matters, but at least it is a little bit more aesthetically pleasing. So bear with me as we look at this chart from Schwab TD Ameritrade. I'm not associated with them. I do use their product. And if you don't exactly see everything on this, that you understand, that you recognize, there's a lot of lines on here, a lot of different colors. I totally am here for you. Everyone's got a different setup. We do have a red day in the markets. That'll happen. So that breakout that people were looking for, a couple days ago does not seem to be materializing as of yet. It could still materialize in the future, but all we can really do is look at our current portfolios and say, hey, you know what? We may not be trading day to day. Hopefully not. If you are, no big deal. No shade towards you. I can point you to a lot of people. Maybe a stocks to trade type newsletter. There's newsletter opportunities. If you go to that link in the description, selfadvisors.com/newsletter. It's that link right in the description. I might say selfadvisors.com/subscribe. It all gets you to the same place. You get my best 6 AI stocks for August. Those are my best 6 AI stocks for August, updated for August. And the fact is, when we're really talking about public markets, public equities, we got to look at the public equities, right? We can't just say, oh, I ate at McDonald's yesterday, so I think I'm going to buy, MCD. We could do that, but certainly doesn't look like a good idea to me, right? It looks like dog shit. I mean, look at this chart. It's gone down, down, down. It stayed sideways. It had an earnings, which basically sold off, and then it went down some more. Not what you want to look at, but it is $1 billion plus company, and that's a plus, okay? So if you are going to ask questions, which, God forbid we have some interaction in this 3-hour live, that's fine, but do make sure you ask about a company with a market cap of over $1 billion. You get me? Over $1 billion, not under $1 billion, over $1 billion. So $1 billion is quite a lot, right? So that's how we look at companies that are here to stay, right? They're the real ones. They're the ones like McDonald's, the ones we just looked at. So we want to look at companies that are over $1 billion. That is one requirement. Another requirement is they have to be over $5, okay? $5. Because when you look at stocks under $5, well, you get a lot of funny business, right? We don't want anything to do with that. Now, $1 billion and $5 is a start. It's not a lot. It's only two filters, right? It would be great to have a little more going on than just that. And so for that reason, I like to say we also want to look at stocks that are moving, okay? Stocks that are moving. Moving stocks that are over $1 billion, right? That are over $5. Sorry, I was just checking my Roblox over here. Just kidding. All right, so if you have any comments, drop them in the live chat. If you have a ticker, drop it in here. But That's what we're trying to do, okay? And this is the SPY. This is the market. So that should pretty much be very approachable to everyone. Because everyone has some money in the markets. And if you don't have money in the markets, well, you might not have any money at all, because if you have dollars, right, then you own the dollar, right? You are a holder of DXY, the US dollar. That's what you decided to buy. You may not have realized that that's what you decided to buy, but by not deciding, by not doing anything, this is what you hold. Doesn't look great, right? Actually, it's gone down quite a lot since 2025. You know, if you got a big paycheck January of 2025, big bonus in dollars, and then you just kept it in dollars, well, it went down like 10% or something, right? It went from like 110 to 100. So we measure everything in dollars, so that's a little confusing, but it's not really. Actually, it is. I don't even know what that means, but you get what I'm saying. Everyone owns part of the market. So if you own nothing, this is what you own, right? This is what having money in cash is. You own this thing that went sideways. And for sideways, for a lot of people, sideways is pretty good, right? Sideways is like, I don't have to worry about it because it didn't go down. I mean, there are certainly periods where the dollar has gone down, but not for like long periods of time, right? Here it went down a little, but it's basically been going up. So when people talk about the devaluation, let's see how big we can make this. That's 20 years. Can we do like 50 years? 50 years would be pretty badass. Let's see. Year. No, we can only do 20 years. I don't know, max available. Can we do max available? Let's see how much time we can look over. No, basically 20 years. It's not even that much time. But basically dollars went up a little bit, right? And the reason people always say, you shouldn't just buy the dollar. You shouldn't just keep your money in dollars. The reason they say that is because if you bought SPY, if you bought the market over the last 20 years, that thing went up more, right? If you had $100, it was worth like $700 now, right? That's quite a lot more. Whereas if you just had dollars, it's worth a little more, right? It was worth $70, now it's worth like $100. So it is more higher, but if you just looked at the SPY, that one went more higher, a lot more higher, right? Pretty impressive, actually, how much this thing went up. It was down here, and now it's up here. So that is sort of a whirlwind tour of the devaluation of the dollar. Okay? The dollar was devalued because it has the same value as it had, whereas other assets have more value than they had. That sounds like pretty much as clear as we can possibly make this. So look, this is the market, okay? It's going up. It's been going up. Right now it's not going up. But when people talk about software, I don't know what they're talking about, right? This was a few weeks ago. It went up, and now it's coming back some, okay? This is software up here. So that's pretty much what we got going on here. We got the market, we got the dollar, and we got software. And if you're not talking about the market, you're not talking about the dollar, and you're not talking about software, well, you might be living in like the real world. You know, you might be like touching grass and stuff. And we can't have that. So that's the important stuff. Now, there's other important stuff too. So that's what we got going on here. People always talk about CPI, right? CPI, the I is inflation. There's some other letters there as well, but we wouldn't worry about those. I don't even know what all those letters are. The I is definitely inflation. So inflation matters because if the dollars get inflated away, they just fly away and you have no dollars, right? No, but it does matter. It does move the market because it's a number that comes out and everyone looks at it. That's pretty much all you need to know. It's a number. It measures inflation, or it tries to. I don't think it does a great job at it, from what I understand. And then sometimes the market moves. So that's what you need to know about inflation. It happens, and sometimes the market moves when that number comes out. But the one, see, you've got all these countries here. The one you want to look at is the one about the US, because other countries don't really matter, right? So what you just need is you need the I from CPI, and then you need US. So there's all these economic events. This is like economics 101 here. You know, this is about as important as it gets. All this stuff going on here. This is like, look, Jackson Hole. Sounds pretty important, right? But those big events, they don't come up every day. In fact, that CPI, I mean, we can look. Yeah, it happens for other countries, but let's see. If we go to Google, when is the next CPI? September 11th. So it's not for a while. Like I was going. I'm going to have to keep going. There's a lot of events, but most of them just don't matter. They just don't matter, right? I mean, they matter, but if you're just really worried about dollars and the market, they don't matter. There it is, though. CPI, there's the I, inflation. There's the day. It's a pretty crazy day for CPI. And there's the time. You're gonna have to wake up early for that one, unless you're like a real person with a job and stuff. 8:30 a.m. CPI. US, that's America. And then D, that's dollars. So that's a big deal. We just had one of those too, like a week ago. So it keeps happening. It's one of those things that just keeps happening. But as far as other going-ons around the world, we've covered quite a lot in this live show, but we're kind of getting towards the home stretch. We've done almost an hour and 45, believe it or not. We are soliciting guests, but we also have to understand what they're talking about. So this guy is pretty interesting. Levels. He basically recruits a bunch of like unemployed people to look for jobs, and then he gets paid. He's like a recruiter, but he doesn't want to hire employees. And instead, he goes on podcasts. That's my understanding of Levels. And then if we continue down, we've got some other pretty major people here. This is another important figure in the market. Compliant VC. So what he does is basically he makes sure that Americans don't get too full of themselves, and he keeps everyone sort of spick and span. So he's working on pushing through a billionaire wealth tax right now. This Mamdani figure. So that's Compliant VC, this guy. You've got Citrini. Citrini, not to be confused with citron. Citron is it's like a fruit, like a lemon. Citrini, they did the AI report that crashed all the software companies, right? So everything was good. Everyone was like, bull market, let's buy stuff. Market moves. Let's buy prof firms and, go on leverage and stuff. And he was like, hey, guys, maybe AI is just going to destroy all these companies that you just bought. And so the prop firm guys, they don't really matter, right? They have like $1,000. That's why they're buying futures. They don't even have like a couple grand to scrape together to like short. They don't even have margin. So they can't even buy like and sell stocks or like short or anything like that, right? So they think they're like macro commodity traders or whatever. They think they're like foreign exchange, like globalists, these prop trader guys. So what Citrini does is he says like, hey, if there's anyone out there who like actually does foreign exchange macro trading with like hundreds of millions of dollars, you guys are all screwed because you're buying these AI companies, and you're also buying software companies. And the problem is they're competitors. AI companies are just going to eat the software, right? AI is eating the world. That's what Mark Andreessen said in 2010 or something. He was ahead of the curve. Mark Andreessen, the founder of Netscape. He basically created the whole media landscape for AI. He birthed TBPN, you could say. It's the guy with the bald head. Okay? So that's what Citrini does. That's Citrini research. Now, if we go down more, we can see some really important figures in the global like media landscape. Like this is one of the most respected names in venture capital. Like a lot of venture capitalists look up to this man because he's very like quiet. This is Jason Calacanis. He does happen to have his first name as his handle, but I don't think that's like an ego thing. I think he just happened to, just for convenience, so people can find him easily. Because he's tough to find. He's not everywhere. But he didn't really have any big investments. But for some reason, he's really well respected. He like knows his stuff. He's like the Gavin Baker of venture capital. Okay? So that's Jason Calacanis. And then if we go down here some more, there's some more important people here. You probably know because you're very well informed. If you're watching something on YouTube at 3 p.m., you probably know more than just about any of these people that I'm even looking at here on X. Okay? Here's another guy, a really important figure in Texas politics. That's Joe Lonsdale. He's kind of like the teacher of the teachers. Okay, Joe Lonsdale. He co-founded Palantir. He was also a trader type. Think of him as like your roaring kitty, with a podcast who didn't have to go dark because he didn't have to like testify in front of Congress for, potentially manipulating the market. So he's doing it the right way. He's like co-founding a $1 billion company, which is what we trade, Palantir, right? So that's Joe Lonsdale. He has a podcast. He has a YouTube channel. He has probably just about everything you need because he's a billionaire. Except happiness, maybe. Okay. So who else? Who else is important? There's Gavin Baker. I already mentioned him. Sort of as like one step below Jason Calacanis in terms of like, you know, like technical knowledge of AI build out and all that. But he's another venture capitalist guy. You can see he's sort of progressive. He's a partner of someone. Yeah, he also uses AI a lot. So he's also a little bit of a degen like you guys. You guys on YouTube or X, wherever you're watching this. So that's Gavin Baker. Give him a follow. Okay, so who else here is really important on X.com? Let's see. There's not a lot of important people, if we're being honest, right? It's a pretty big place. It's kind of like a dive bar. And the fact is, most of these people just don't really matter, right? Nikesh Arora matters. He's doing a podcast circuit right now. He's sort of becoming like the Elon if Elon were, gosh, like better dressed and, you know, had a conscience. Anyway, he's putting himself out there. And his company is PANW, ticker PANW. That's Palo Alto Networks. It's got Palo Alto in the name, right? How much more Silicon Valley can you get? Palo Alto. Alto. I don't know what it means, but alto is like singing, I guess. Palo Alto. It's where all the companies come from. So super, super secure choice. If you're looking to follow some more X accounts, that's Nikesh Arora. Who else? Who else is worth following here that could really help you guys out? These guys, you already follow these guys, right? Yeah, they're doing their European vacation, taking their 2 weeks off, you know, going to Paris, whatever, smoking it up. Typical debauchery from these children. You got these randos here. I wouldn't pay attention to them. Probably never traded a share in their life. Who else? If you do have a stock that you'd like to look at, go ahead and drop that in the comments. But otherwise, we're going to keep it moving, okay? Because it's a big place. Here's one, Lance Brightstein. He's responding to the recruiter, right? 2 people. I just mentioned this guy, Levels, the recruiter. So he's a little edgy, this guy Lance, and that might be because he has edge, okay? He is a top trader, a market wizard. He has some ventures as well going on, community-minded and otherwise. Give him a follow. Not saying you're going to make $100 million, but you just might learn a thing or two. Now, who else is cooking on here? Who else? There's a lot of resources that could change your life here, guys. So just pay attention and we'll get through this. There's a lot to not look at too. So let's keep looking. Let's see if there's anyone who is super, super influential here in the public markets. Not just software-wise, but markets-wise. What we can also do here is look at some sort of show-related people. This is Harry Stebbings, right? He's the London boy. Yeah. He interviews the unicorn founders and grills them. He's like the Stephen Bartlett of AI. Okay. He is the next David Senra. So take a look at his venture capital talks. Okay. This is like an online lecture. Pretty 2026. A podcast, they call it. All right. Who else is worth looking at here? There's Ariel. We talked about Ariel. I said I was going to talk about billionaires and robots. Here's a guy that talks about robots, Ariel. And he even mentioned a company. Okay. We're not going to look at the company because you know what we look at here. We look at the market. That's SPY. We look at the dollar. Okay. The death of the dollar is trending right now. And we look at gold. Okay. If you're a gold bug, you're in the right place. Occasionally, not right now, because no one cares about it, because it's absolutely wrecked, we look at Bitcoin. It's painful, but sometimes we do it. It's irresponsible, but we all slip up sometimes. Okay? So that's the docket in general. But to fill that docket up, we got to find people to talk about those topics with. And Ariel is doing it right, okay? All right, so who else do we got going on here? This guy's a real loose cannon. Pedro, okay? This guy is like Dario if Dario had a conscience, okay? That's Pedro. He's like the liberal form of Dario. Notice he's still employed at a university. He was not coerced. His morality was not co-opted to join OpenAI, okay? No shade at the TBPN boys, okay? But he's still teaching things. He's writing things in like a book with like multiple words and stuff, okay? He may have done a little bit of hedge fund management stuff in like another country, but may have just been advisement too. But that's Pedro, okay? Pedro Dominguez. So that is a guy worth a follow, okay? That's why you come on this show, okay? To learn about things like this guy. He's like Andrew Ng if Andrew Ng was spicy, okay? Like what if all these Andre Karpathy guys, instead of going private, no pun intended, making their profiles private, not joining private companies, instead of doing that, if they just talked, are they going to be less rich? Yeah, they're going to be a lot less rich, but they also will get to say interesting things out loud that we get to read. So that's why you follow Pedro Dominguez, okay? So who else is worth following here? All right. There's quite a lot of people here. Some of them you may have heard of. Some of them you may not, okay? That's the interesting thing with the X timeline is it's different for other people. Like I was looking over here, trending is Google Ads, right? Google Ads. That might be trending for everyone, but I don't know, maybe not. It might just be because I have an interest in advertising, right? This is also trending. It looks like some sort of Trump thing. Monarch, maybe related to kings. If Blue Sky is like no kings, X might be like kings. Not sure. Don't quote me on that. And then some like conservation stuff. You know, it's lovely. But those are the big X accounts that are market related. Because the market right now, as I've just said, and we've gone over, it's SPY, it's the market, it's the dollar, and it's gold, okay? And if it's not those, it's speculation. So if you don't know what speculation is, don't worry. It's not what you're doing, buying and selling individual stocks. It is speculation, actually. But it's also venture capital. So that's like speculation, but people think it's professional, right? So that's why we talk about venture capital, because we get to talk about venture capital companies, which is like speculation, except you don't have to actually prove if you're right or not. Because by the time they succeed or fail, it's been so long that everyone basically forgets what you said in the first place. So it's a absolutely beautiful industry to be a part of and to talk about online. And that's why we're doing a 3-hour show, okay? It's a market-related show with a bit of a venture capital bent, because if you go on X, which is Twitter, right? Same thing. Some people don't realize that. Twitter is actually X. It's the same thing, just has a different name now. That's venture capital. It's mostly venture capital. Like if you look at here, it's all venture capital. Look, there's the bald guy we were talking about earlier, who wrote about how AI is eating the world in 2010 or whatever. I would talk about this guy, but I don't think he's made any public appearances, so I'm not even going to bother. But there are some other people here who are worth paying attention to, who could help you on your journey towards market dominance. Okay? Let's find them for you, because it's easier to have them found for you than to find them yourself. Here's another one. Bradley Gerstner. Okay? He's got another nice little spicy short alt cap handle. Okay? Because his name is Altimeter. It's not like alt. He's not like alt rock, although I think that's sort of what he's going for here with the beard. I think he wears the leather jackets too, like Jensen. But he's all about his Trump accounts right now. And he's going with the Trump name. He's sticking with the Trump name. You know, a lot of people just want to call him. You see how he's done Invest for America, or whatever it is, Invest America. Like he ran out of characters there and just did Invest America. Whatever it is, he went with this little vertical line here. I don't know what that's called, but you designers know what I'm talking about. To say that, hey, he's going to call them Trump accounts. He's also going to call them Invest America accounts. So he's kind of playing both sides of the aisle here. And he does altimeter. Okay, that's where alt cap comes from. He is also known as, he's like the 6th bestie or something on here with this guy. Okay, this is David Sachs. He like runs the show. And then this is, they hire this guy to ask them questions, basically. So that's Brad Gerstner. So that's pretty much it, guys. I mean, of all of the people on Twitter, I don't know that there's really anyone else worth listening to. I mean, there's people with bigger followings, but in terms of people that know things and say things, it's a pretty tight group. That's what venture capital is all about. There's this guy. He's often seen in memes. He decided to start a machine learning consultancy like 10 years after it would have been a good idea. He decided to spell it in numbers instead of giving it a name, which makes it really hard to identify what it's doing, what it's all about. But he's definitely social. This is one of his most successful ventures after founding Facebook. And yeah, he's about as clean. He's got a clean persona. Okay, this guy. Not aggressive. Very godly. That's Chamath. Okay, so those are the important ones on X. if you do have a ticker, if you do have a stock, go ahead and drop that in the comments. But if you're just looking for people to follow on X, that's what we've got going on as well. Okay. These are the important people on Twitter. And they're important because basically they collect all the money, right? There's a bunch of money. They collect it all. And then they buy all the AI companies. And when they buy the AI companies, the companies go up, the stock prices go up, and you make money. That's pretty much how it works. It's not rocket science, okay? It's just venture capital. And the great thing about it, these guys talk a lot too. This guy, Jason, it's another Jason. This is Jason. If Jason never invested in Uber. So he does conferences and stuff. These guys both do conferences. They're pretty strong-willed. They both say a lot of things, actually. This is Sam Parr. They say a lot of things that you've probably thought before. Okay? He's kind of like the Dan Martell of actually doing SaaS instead of like selling your company 15 years ago and then talking about SaaS. That's Jason Lemkin. Give him a follow. All right. There's another early investor. There's quite a lot of these here. But once you get the lay of the land, once you know who to follow, once you know who to listen to, theoretically, in like some parallel universe, that would make you money. Like listening to the things that these guys say about the companies that they purport to know a lot about. Okay? And the way that works is sometimes they'll talk about a company like SpaceX. People get all riled up. And then the company goes public, which means you can buy it. And sometimes it goes up more. Not very often, right? Not very often. But to their credit, and to the credit of people who were very excited about SpaceX, SpaceX did go up very briefly. Okay? So that's why we pay attention to people on Twitter. And there's a lot of them. This guy you may have heard of, this is Jason Fried, okay? He started a company and is still running it. It's basically like Microsoft Teams if you like to use it, okay? I've never used Microsoft Teams, thank God. But my understanding is if you use Google Docs and you got a bunch of people who are trying to do something, eventually you kind of step on each other's toes and you want to put stuff on like to-do lists and move it around and stuff. And the great thing about his thing, Jason Fried's thing, is that even if AI wrecks all the software companies, his thing is not traded on public markets, which means, sure, you can't buy it, so sorry about that. You might have some secondary SPV type thing going, but it's probably not publicly circulated. Can't imagine how many employees they even have. His company could still be worth what it's worth because they sell their Google Docs like product to people who want to buy it, who sort of buy it because he's Jason Fried. I mean, it's good. I'm sure it's good. But I mean, mostly they buy it because it's Jason Fried and they like the guy, right? Don't get me wrong. They want to buy into what he's got going on as well. I'm just saying it's an advantage that even if AI can do everything, what it can't do is compel people to buy your product just because they like the things you say. So that's what Jason Fried's got going on. He's like a modern moral manipulator. All right. So those are basically the main people you want to follow in the markets. There's a fair bit of them. They post information every once in a while that can help you make decisions. And you just want to look for that when it pops up, because it won't pop up every day. And if it does pop up every day, you kind of have to be wary, if we're being honest, right? I mean, every hour, like how important can information be that's posted every hour? You can come up with headlines every hour. I mean, there's plenty of stuff happening. But I mean, as far as market moving events every hour, pretty rare. Maybe on CPI day, like September 11th that we just looked at a month in the future. Maybe. But for the most part, there are not that many events that are important. So that's why if you find some people, and we're getting to the same people here, so I'm just going to give this a little refresh. You can sort of refresh your ideas, come up with some stock ideas, decide if what you're holding is important or not, and then go on from there. Here's another guy, David Weisberg, okay? This guy's hot on the scene. He's basically talking to people who manage money for colleges, right? Basically, and for like fidelities and stuff. So it's nice because he gets really big numbers to put in the titles, like trillion and billion and stuff. And it's nice for the people he interviews too, because they make like 2% of a billion, right? They make like $20 million a year to talk to people like him and to talk to people at colleges and at fidelities and stuff. And they get to have nice lunches and they get to dress up. And occasionally they'll get liquidated, like when situational awareness, the German guy, got liquidated. They maybe bought some stocks that he did and they get liquidated. But the great thing about this whole community is that it's more about, does he know the person he's interviewing? Does the person that he's interviewing know the person he previously interviewed? It's like a family. That's why it's called a family office. And so if they all know each other, well, and they all do bad one year, it doesn't really matter, right? The university endowment is still going to give them money the year after. Okay? So that's why this is a great business to be in. I would be in it if I went to an Ivy League college. I did not graduate with a full degree from one. So what else do we got going on here that is borderline obnoxious that can come out of my mouth? Well, there are a lot of names, a lot of voices. This is kind of the place to be, right? This is the center of markets. I know that's crazy to say, you know? How could Twitter, how could X.com be the center of markets? Like, shouldn't it be a Bloomberg terminal? Shouldn't it be the Wall Street Journal markets section? Shouldn't it be, you know, Wall Street? Shouldn't it be like literally in the Wall Street building? And the fact is, if you go and walk into the Wall Street building, shouldn't it be CNBC? Like watching this guy? And it's like, well, let me ask you this. Do you think this is going to help your portfolio? Listening to the CIO of the whatever fixed income. That's the thing, like people who are like 80 have all their money in fixed income, right? Listening to this guy talk from JP Morgan, do you think this is going to help your portfolio? Do you think so? Now, if you're a money manager, like you're another CIO, maybe you do watch this and maybe they sell some ad space like this NASDAQ thing here. That's a company, right? You can trade that. You know, this is like investor relations for NASDAQ. Well, they're actually at NASDAQ, but it's the same thing. It's close enough. The point is, this is not for little people, okay? But there are people that are for little people. I just don't know how many more of them there are. There's this guy, you know him, he does the good drugs. But that's most of them. That's most everyone. I'm not sure my respect for TBPN has gone up, but I guess you could call it just amazement at them doing it for 3 hours has definitely been reaffirmed. I mean, it's a long time to just say the same thing over and over again. And I totally get also why they never really listen to their commenters or like shout out their commenters. Occasionally they actually do. I'm just a little sore. I haven't been shouted out by them. But I'm totally getting it now because they've been doing it for like a year, right? Or longer. And at times they'll have like 10 people in their chat, which is like nobody, right? So I can totally see how it's worth not even listening to the chat at all and just basically maybe scrolling through it like every 10 minutes or looking at it afterward. Like that makes a lot of sense to me. So you kind of have to have your own show and then basically from there be like self-starting. Like you have to be interested enough in the content that you don't actually need commenters, which to me it's sort of absolutely foreign as a concept. Really, it makes no sense. But they keep doing it. So there's got to be something there. And they also got acquired for like $200 billion. But maybe the more important thing about the TBPN acquisition is not the $200 billion, but maybe more like the percent of Sam Altman's net worth that they were gifted, right? So if he's worth, in terms of like OpenAI's money pool, like the buckets of money that they can just buy gifts with. Let's say they have 50 billion to buy gifts with. And the TBPN boys got 200 million of it. Well, if you take off the M and you make this an M, it's like someone with 50 million buying you for $200, right? So when you think about it like that, you kind of see how it was possible. Like the $200 thing might not even be worth $200, right? People with $50 million, they buy things for $200. They might even just send someone $200 over Venmo just as like a joke. So now if you have $50 million and you can say, hey, I'll give you $200. By the way, we're having some trouble with people liking us, and people seem to like you. So maybe you can have me on once in a while. And gosh, I don't know. Maybe just smile when you say OpenAI once in a while, Smile. Is that going to create $200 worth of goodwill? Is someone going to spend $200 on OpenAI credits? Probably. So it's a pretty good deal for the guy with $50 million. So that's pretty much how the math works there. 50 bill. Actually, that's 200,000, but you sort of get the idea. Now, before we close out here, and this has been a Herculean effort, we're about 2 hours and 15 minutes into this tirade. Typically, what would happen with a 3-hour show is people would ask questions like, Woolifer. So Woolifer asked, should I buy a used truck for 35 grand right now, where price is going to go down for vehicles if money goes down? Now that, my friend, that is a question grounded in reality. How do these economic events, inflation, we might even have like auto sales on here. I mean, I think I saw it recently. Don't really have to worry about unemployment. That has nothing to do with, retail sales. That's not really autos. Should I buy a used truck for 35 grand, or a price is going to go down for vehicles if money goes down? That question is worth a lot of money to vehicle manufacturers. So I know there are some good answers right there. And my question for you, Wolfer, is have you asked any of the AIs that question? And if we ask AIs that question, are any of them going to say things that make sense? Or are they just going to give us slop, right? Because the one thing that AIs are bad at is predicting the market. That is for damn sure. But what they're good at is just telling us what to look at. So there's 3 things to look at usually, I would think. There's SPY, the market, there's the dollar, and then there's gold, but the gold part doesn't really matter for buying a truck. I think the price of gold is not going to affect, I think, the price of vehicles. So let's see what chat has to say, and then let's basically poke holes in this, okay? Because this data is, I think, good. I've believed everything crashes in 2030 since 2012. Oh, you're like a Ray Dalio type. Well, if everything crashes in 2030, you probably don't want to wait till 2030 to buy a truck, even though it might be cheaper 4 years from now. But that's what chat's going to say first off, right? I would not wait purely on the rates going down, truck prices go down. But this is like the gymnastics that CNBC will do, right? They'll say, oh, look. Well, first off, I guess when you say buy a used truck, I guess what you're asking about is getting a loan on a used truck, right? That's an important question. Because most people, when they say they're buying a truck, they are saying that they're getting a loan on a truck. But it could also mean that you're buying the truck with cash. And it actually does matter. 35 grand today versus a year from now. your 35 grand could go farther. But if you're talking about rates, that's what chat's going to answer here, which is like the loan rate, right? So if you're getting a car loan, rates go down, auto loan rate is going to go down. It's obviously what you want. If rates go down for the market likes that. Trump is overseeing the bankruptcy of America. And we're going to go full social credit score system in 2030 with flock cameras installed on every corner. No, I added that last part. But yeah, it's a fear. It's definitely a scenario. But in terms of just buying a truck, you probably don't need to worry about America going bankrupt and Trump. Maybe you do. But let's look at it super simple, and then we'll see if this is all BS, basically, what Sam Altman's telling us from chat, right? You need the truck now. Well, obviously, if you need it, there's no point asking the question, right? But the way you asked it, it sounds like you don't really need it. You already have transportation to get wherever you need to go, to get food, maybe go to a job, whatever you need, go to appointments and stuff, doctors or whatever. You've got transportation, it sounds like. So this is probably not what category you're in. You just want a truck. Chat says wait, but why does chat say wait? I think they say that because of this. So this is the real, like the all-knowing, do you trust this? Cox, I've heard of Cox, but do we actually trust this out of Atlanta? Wholesale used vehicle values, so prices, were about 2% above a year ago. This was a few months ago. So they're saying prices are a little higher right now versus a year ago. They've calmed down a little in the last couple months. So is that going to continue or not? And do the prices coming down the last couple of months have anything to do with rates? I think that's the bigger question. Because I think you're asking about getting a loan. I'm going to assume you're asking about getting a loan. And we can stress test this right now. Like, does this make any sense at all? Everyone's talking about rates, mortgage rates. It's got to grow the economy if rates go down. Everyone's talking about the Fed, right? Kevin Warsh, Jerome Powell. Now it's Kevin Warsh. Did rates go down in the last few months, right? Because we just saw that used vehicle values, prices, same thing, are down a little bit. So let's see if that actually held true for right now. And that's what I was worried about. Not really, right? Because the rates have been unchanged. So if we're going to make a decision just on rates, which is what we're kind of matters, right? If you get a good rate on a $35,000 truck, I mean, you tell me, you might end up paying $40K, I don't know, versus like $50K or even worse, right? Over the next 3 years, 4 years. It's a big difference. You could save like 5 to 10 grand from getting a good rate. So it's a good question to ask. Can you actually predict it based off of rates though? So that's what's a little weird. And when we're talking about rates, we're talking about, we're talking about the rate that the Fed gives which also is the rate that you get on your car loan. It's not exactly the same rate, but it's all based off of the rate the Fed gives. And then you add some more and you get your auto loan rate right here, that's the number that makes more sense, right? 10%. So the problem here is that rates didn't really change, but vehicle values went down in the last few months. So we can't really use a market-related approach to finding out if now is a good time to buy used cars. That's my answer. I know it's not a satisfying answer to hear, but that's the reality of it. Now, if you know something about used car prices, and forget about the auto loan part of it, I mean, if the used car itself is just worth less, if you can just get a better deal, you get a 35 grand worth of truck for 25 grand or something, that would be great. Maybe that's kind of a stretch. Then you don't even have to worry about the auto loan rate as much, right? I mean, we can pencil it out too, like how much does the rate matter? Forgetting if you even are getting a good deal on the truck, which, as you can tell, I know nothing about that. But the difference between 10.5 to 11.5%, pretty much. Let's just keep it. Let's just keep it simple. Do those numbers sort of check out? 10 to 11%. What would be the difference in total cost of a 35K truck? I think Chad's gonna understand what we're asking there, right? I didn't even think about 60 months. That's maybe longer than I was thinking. That seems like a long time. But 60 months, if you finance the truck for 60 months and America doesn't go bankrupt, Trump doesn't make America go bankrupt, we don't have a social credit system, we don't have flock cameras on every corner, you're able to buy a vehicle, right? And you're able to get 5 years of financing. This is 5 years, right? 60 divided by 12 is 5. And it's 35 grand, so this has nothing to do with whether car prices are good or bad. The difference is $1,000. So for $1,000, I mean, pretty much, it's not going to factor into your decision to buy it or not, I think. Now, I guess, and we're really stretching here, but I guess you could say, what were auto loan rates in 2025? What were auto loan rates in 2024? Right? And they're all kind of in that range. So we're still kind of talking about $1,000 range, or less even. I mean, this isn't even a full percentage point. Right up here, we were looking at 10 to 11 up here, 10 and 11, and here we were looking at 12 to a little over 11 for 2 years. This is a difference of 2 years. So it's really not, the rates themselves. So the Fed rate, what the Fed does with rates, is just not going to move the needle, as far as I can tell, on whether that is a good decision or not. So I don't know if you're so washed or not, but that would be how I would go with that. You either know a lot about trucks and you can get that 35K truck for 25K because you're a wizard, or you don't know much about trucks, and you don't have to worry about rates. It's pretty much as simple as that. All right. So if you got questions about the market, we can talk about the market, but what else have we got going on here for people to follow for the market? Because there's a lot of people on here. I don't know if they're all worth following, if we're being honest, right? I mean, how could that even be possible, right? There's so many people. I mean, it's fun. It's fun to look at what Nancy Pelosi bought, but I'm not convinced that it's really going to be a needle mover. Because you would have to know what she bought when she bought it, not a couple months after she bought it, which is a big difference. Big, big difference. So that is the problem with all of these reports on what everyone bought. So they didn't buy it today. They bought it a while ago. So we'll keep chugging along here. See if we can find some more helpful people here. And when we do, we will describe, give a little pitch for them, because there's definitely some good stuff cooking on here. But it's kind of like wading through trash, right? There's a lot of trash on Twitter. Everyone knows that. It's a dive bar. That's just the fact of the matter. But the good thing is, sometimes there's good stuff too. So this is our TBPN tribute show. So they've just gone to Europe for vacation. We're doing a 3-hour show today. See if we can keep this up tomorrow. Made it about 2.5 hours, so that's pretty solid, I think. Shouted out a lot of awesome market resources for you guys. You'll be able to see the recording as well. You can also scroll back in the live show, maybe even chop this up and generate some clips from this. We just might. But yeah, nothing too crazy going on in the market today. Market went down a little bit. And when we looked at the market, which we did, we looked at the market in depth here, we can see that it's going down, but it hasn't really moved in about a week, a little more than a week. And if you're not looking at the market, maybe you're looking at oil. Oil is doing fine, kind of in the same middle range it's been in for a few weeks to a month, actually. A couple months, really, at this point. And people talk about Bitcoin, but we don't want to look at Bitcoin because it's just been disappointing us for so long. So really, it's the market, oil, and Bitcoin. And if you're not looking at those, well, you better know what you're doing, because there's not a ton of opportunity today. That's going to be just how it is sometimes. I mean, we looked at software. Software is taking a breather, in my opinion. The market as a whole is taking a breather. It happens. It's no big deal. And you just have to let it be. And maybe you buy a truck. I mean, that's what Wolf just did. Well, he didn't buy a truck, but he's talking it through. And when you talk about buying a truck, you do start thinking about rates. And so it all ties back to the market. But, and this is important, you got to do your homework too. Because what we just found out looking at rates is that if he's deciding if he's going to buy a truck and it's 35 grand for a truck, is it really worth holding off for a year? You know, just on the chance, you know, it might not even happen. It's the chance that rates go from, you know, and I'm assuming he's leasing the truck, getting a loan instead of buying with the cash. If he's buying with the cash, well, I don't know that it really matters in terms of any connection to the market, right? You just buy it. Maybe you look for a good deal, but the rates don't really matter if he's buying it with cash, because all that rates would do there would change the value of cash, so the value of the dollar, which matters. But if we look at the dollar, and we were looking at the dollar as well as the market, it pretty much goes sideways, right? It might go up a little, it might go down a little. Hopefully it's going up, right? Hopefully it's not, you know, dying. But if you don't buy, if you don't own anything, this is what you own. It's the dollar. Like if you got money if you got money under your mattress or whatever, you own this. Like you might not feel like you do because you don't have it on your phone or whatever in your portfolio, but this is what you own. And if you own a retirement account, you probably own this because they just do that automatically. Like everyone who just bought SpaceX automatically when it IPO'd. But yeah, so rates don't really matter. That's what we concluded. If you're buying a truck, because if it's 10% or 11%, what are you going to do? You're going to save $1,000 on a $35,000 truck, and you're going to have to wait. Like rates might not even come down for another year and a half or more to save that $1,000. So probably not a needle mover, but everyone thinks about it a little different. But yeah, probably not a needle mover. But looking at the market as a whole can be a needle mover, which is what we got going on here. So just working on seeing who else is worth tuning into when it comes to the market. There's a lot of them who talk about the market. I don't know about how many of them do it consistently. That's like a major thing. Can you talk about the market, and can you do it consistently? And can it be somewhat like not obnoxious? That's a lot of factors all at once, right? And you get all those in one venue or whatever, one person? Probably not. Maybe, but probably not. So that's why you go to the town square, you go to Twitter. It just is what it is. Okay? All roads lead to X. So, what else can you look at here for people? We've talked about the big ones. Definitely talked about them a few times. Most of these people are just not that consistent. Not that there's something going on every day, but I mean, we're really going to talk about, you know, the 10-year treasury yield, the 30-year treasury yield. Like, the thing doesn't move, right? It just doesn't move. And I know we want to talk about rates, but we just did a whole example with the truck on how it just doesn't matter for most things. Like, you want to be aware of it. If CPI comes out, inflation, you want to be aware of it, the inflation number, the CPI number. But for most things, it's not really going to matter. I mean, so CPI is coming out September 11th, right? And it came out last week. So like August 12th or whatever the day was. Whatever. One of these days. I don't know why I said 12th. It's probably not even right. Whatever last Wednesday was. Way before 12th. The market didn't really move. It was the 12th. The market didn't really move. Like it moved a little bit. It moved down a little bit. But for the most part, it didn't move. So when everyone's talking about CPI, 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 I talk about it. We talk about it. But it's not really moving at all. So that's CPI. Now, we'll see. Maybe in early September it will make the market move. But this move, and this is a move, I mean, this matters to everyone. Everyone notices this. This is a lot. This is a move. This is because of the AI thing. And what's crazy is it doesn't even look like the market went down that much when the German guy blew up, right? Leopold. The market went down a little bit, but it didn't go down that much. You wouldn't have thought if you just look at this. I mean, before we get to the up part, like it's scary when you're in it, but it had already done that twice. It did it here. It did it again here. And now it did it a third time. And that was the time that for whatever reason, the dude was sleeping this day when he got liquidated or something. Someone posted a picture of all of the like Bloomberg terminals of all of the limited partners in his fund, which doesn't even make any sense as to why they would have to be awake to see his fund get liquidated. But maybe it was the people who were, I guess it's his like his employees sort of have a equity stake in the fund, so they're limited partners. None of them were awake. They all got liquidated. Well, one guy was awake, but it's just amazing how little a move like that messes up so many people's accounts. So this move was a big deal, but the market really hasn't done anything in the last week and a half, 2 weeks. So if it's not going to do anything, you don't really need to worry about it. I mean, maybe that's a simple view, but it doesn't look like it's doing anything to me. I don't know about you. Everyone's talking about AI, AI, AI. Software's dead, software's dead, software's dead, software's back, software's back. Software, you can't buy software right now. Who is buying software right now? Like, are you joking? It already went up. It was down and it went up, and now it's taking a little break. You're going to buy it now, and you're just going to hold it just because that one company got acquired, that software company, Workday, WDAY. That's absolutely crazy, right? Doesn't make any sense. Looking at the market makes sense. Looking at the dollar, it's fine. Just nothing alarming here, right? Nothing to worry about. That's what you want to see. And maybe you're looking at oil, but for the most part, you're not, right? You don't really need to look at oil. Unless you're like buying an airline, maybe you want to take a look at oil, right? Oil prices go up. I don't know that you want to be buying an airline. Okay. But for the most part, it just doesn't really matter that much to know like the price of oil or if oil went up in the last week or not. Like it just doesn't. But the market's everything. I mean, a lot of it is the big companies, Meta, Microsoft, Amazon, Apple, Google, Tesla, Netflix. Dang, that might have been 6. Really, I'm struggling with the 7 today. Meta, Microsoft, Amazon, Apple, Google, Tesla, Netflix. No, that's 7. Is that what I said? So those are 70, not 70, that would be crazy. They're 40% of the market. So they're a lot. They're a lot. So when you look at the market, you're mostly looking at those guys. Which honestly, I mean, it's pretty crazy that if you do nothing, like you don't care about, let's say you just don't care about the market at all. Well, if you really don't care about it at all, and you also don't have any retirement account at all, then you just like cash. So this is your market. But if you don't care about it at all, and you just like your job or whatever just puts the money in a account, a market money account, then you just bought. You made the decision by doing nothing, which is cool. I mean, for most people, that's cool. That's good. You said, I want to buy big tech, basically. I support big tech. That's what I think is going to do the best. That's what I want to own. I want to own Meta. I want to own Microsoft. I want to own Amazon. I want to own Apple. I want to own Google. I want to own Netflix. I want to own Tesla. And I want to own an equal amount of all of them, pretty much. And that's not really it, because it's like they make up different amounts of the SPY. But those are the big ones. That's pretty much what you own. So let's see if there's anyone else talking about market stuff on here. Just cruising around here. That's really good stuff. Because there are some people who are really good, but again, there's not a lot of them. Like, there's just not a lot of them. There's some, but there's not a lot. And we honestly already looked at the big ones already. Yeah. Because like you could look at, yeah, we already looked at the big ones. Most of these other accounts just are not going to help you as far as I can tell. Obviously, I don't know everything that's going on here, but for the most part, just not that helpful, right? And people are always very excited about this account because it talks about semis, and semis are a big part of the market. So you could take a look at this too if you're like into, you know, knowing what companies actually do and stuff. It's not really my thing, but that's why we have an array of newsletters with different approaches to the market. Like some people don't care about the price of stuff. They just want to know that they like the company produces like a house or something and they like houses. So if that's you, like maybe this is your thing. I don't know. So we do have a bunch of newsletters. If you go to selfadvisors.com/, subscribe. Whoops. Sometimes I spell things wrong and I go here, but the great thing is they all go to, oh gosh, actually they go here. Well, I'll have to fix that, but if you go here and you spell it right, subscribe, then it goes here and you can get those 6 stocks. And then once you go in here, you'll see the recommended newsletters right here. So that's how you get those. And you see how they're different. Like this one's about just investing in general. This one's about options. This one's more about stocks. And this one's more about like the dollar and gold. And a lot of people want to own some gold. A lot of people want to know what the dollar's doing. And some people like options. So people like different things. But no matter what you're up to, there's something for you. This is another guy, Anthony Pomp. He's like a Bitcoin guy, but he's also just talking about money in general now, which is good. And he's actually pretty good. Like we were talking about used cars and stuff. Like I feel like if there's a guy on X who's going to actually like listen to you and, you know, give you an approach that's like reasonable for people in most situations, I think he's sort of given the whole go all in on Bitcoin thing a break. Yeah, take a look at this guy, Anthony Pompliano. So he does markets too. Yeah. So this is the TBPN special, Monday special. We do about 3 hours of this. They're on vacation, so we're just sort of seeing what it's like to just blather for 3 hours. Seems pretty painfully boring so far. It's actually pretty incredible that they do what they do, but gotta love them for it. It's obviously working for them, and I could see how if you did have people watching this thing, eventually you could put like sponsors up on the screen and stuff, and they would pay you like a stipend of like $500 a month or something, unless you're talking about software companies, and then maybe they'll pay you like $5,000 a month. I don't know exactly how the numbers shake out, but I sort of can get the appeal. Sort of. Kind of. Not really. Seems really, really, really boring. But they said don't do it for the money, right? Don't do it for the $200 million that they just made. Do it because you love doing incredibly boring things for 3 hours at a time. That's why. But we're pretty much wrapping up here. Our 3-hour session. I think we covered a lot of ground. Talked about SPY. You can see we're trending here. With our 8 viewers, we're trending, so no big deal. Probably gonna have to screenshot that. This is Stock Talk, guys. If he's got 783 and I've got 8, you know, that's pretty much You can see our future is we're trending on day number 1. Live every day, 2 p.m. to 5 p.m. Eastern. Today, we talked about used cars, the dollar. Can use hyphens here. The dollar, software, stocks, and how to get my best 6 AI stocks for August at selfadvisors.com/best. See you tomorrow, ex-market makers. All right. So that is the thing. We could probably do like self-advisors. That's a little too branded for a channel that has 8 viewers that are probably bots. No offense, Twitter crowd. What price would you exit HPQ? We got a last minute question from David Beck right before the 5 p.m. close. I don't know what you're in for, Beck, but I can tell you right now, looking at HPQ, it looks like I would not buy it right now. I say that. You do have a line here you want to be aware of at $29.40. But I'll tell you what, I wouldn't short it, wouldn't buy it. So thanks so much, everyone who tuned in today. We will be back tomorrow on X, filling in for TBPN. They'll be back too. Don't worry. We're doing more of a market approach, which means this should be way easier. But somehow it seems really hard. So respect to John, respect to Jordy, respect to all of the guests we shouted out here, potential future guests who are doing great things. We will clip this up and tag them to annoy the shit out of them until they notice that we exist. And hopefully we don't give up on this, and a year from now we get someone who actually has made like $100 million on this show. All right, that is my whole plan. I just gave you the blueprint. Just spilled the beans. All right, peace out. Maybe we'll get a billionaire in 2028. Later. Get my best 6 stocks for August, AI stocks, at selfadvisors.com/newsletter. Click that link in the description or go to YouTube. Like and subscribe to show this to more people. More people who like and subscribe, more we can help people find great stocks in this great market. Thank you, David Beck, and all